Hey, good morning everyone, and welcome to the PivotBoss Pre-Market Report for March 1st, 2017. I'm Frank Ochoa, aka PivotBoss. Quick note, I will be hosting a monthly market outlook webinar after the close this afternoon at 3:30 p.m. Central Time. So if you'd like to join me, I will be available later on. You can use the link on the Twitter feed to join the meeting very quickly, and we'll cover some futures, some stocks, and look for some opportunities for the month ahead. Taking a look here at the ES, you can see we've had an aggressive rally here overall. Recently, we've kind of gone sideways, and then here today, we're seeing a breakthrough recent highs, 2370. That push right now has led into 2376. We talked about before last week that 2376 half was our last major target on the board. Obviously, you have 2400 as a round number above that. But that 2376 half, which is being tested right now, 2376 obviously comes back from that August 2015 key range. So if we bring this all the way back out, you can see here's the August sell-off back in 2015. Here's the August low. And since then, that range has given us a whole lot of major levels to watch for traps at both edges. Once we were able to see expansion out of the range, you've seen this thing come, hit the 50% expansion, then push right into 100%. So a big time push. We've reached the target for all intents and purposes. And now, whenever that occurs, you can then see how thin the profile is on the right. Here's the volume profile, very thin compared to the bulkiness down here. Typically speaking, you may see this thing rotate back down. But again, this isn't a normal market. That's in a normal auction sense. After you see a major push into a target like this, you may see some sort of rejection and you may see a rotation back down against the range. This may be an opportunity to bring it back up and retest the highs. However, again, we've been in a very bullish market. We haven't really seen much of a pullback at all. So we have to continue to trade the auction at hand. And again, that's buying pullbacks, however shallow they may be, and looking to push it to new highs. Right now, pushing beyond 2370, very bullish. Bulls need to keep that area bid for a continuation higher. Failure to hold above 2370 will start to rotate this thing back downward. So that's a little bit of a higher time frame look at the ES. Taking a look at the intraday time frame right now, you can see here's 2370. Nice push through that area here after a little bit of a chop back and forth. Once it rallied through it, we've seen a continuation higher. So right now, higher lows so far, upward trending or upward sloping VWAP. So pullbacks into 2370 right now, likely an opportunity to defend and push to new highs. That could put you as high as 2381 quarter today and still be considered fairly within range. This is the 125% expansion target. Here's your 100%, but we're already coming right into RTH, so we could very well see 2381 if this one continues to hold above 2370. Here's a little look at crude oil. I've been talking about crude oil and how it's been going mostly sideways here. Recently, we've seen a big sell-off downward, and then here's the previous week's low price. Price got below it. We were watching 53.35 in the trading room. I mentioned if price can establish or reestablish itself back above that 53.35, there could be a shot to rally and into the close. And we saw a big time rally right back to the previous week's close. So notice how the previous session here, that's Monday, rejected the highs of the day before it, Friday's highs, and dropped right into the previous week's low. Prices below the previous week's low were rejected, and price rallied the same day back to the previous week's close. So right now we have a little bit of an impulse range from this high, about 54.60, down to this low, about 53.18, and that could be the little short-term impulse range to watch right here as we kind of play around in this range. But overall, we're still kind of sideways in this range. This could continue to persist. We do have an upward slope to it with a horizontal resistance, and that ascending personality implies strength ahead, but we've got to continue to be patient and wait for it. Here's a look at the intraday time frame for crude oil. In this time frame right here, you'll notice the previous session sell-off the 2-day decline here, and then there's the 53.35 previous week's low. You can see kind of a double bottom below it. Once price got back above it, it was a straight shot back up, and now prices are holding here. You can see a little bit after this major rally, you can see kind of an expanding coil type of thing, or maybe a channel here developing. So overall, we've seen a big push back up. 53.40 is going to be one to watch right here. 53.70 on the bottom end could be a fade new highs, fade new lows with an upward bias in the short term. Look for this thing to just kind of chop back and forth. So it could be fade new highs, fade new lows. All right, here's a look at the dollar. I wanted to bring up the dollar this time because we've had a lot of strength here after the recent decline. If you recall, we had this impulse range that developed here. Once we reached the midpoint, we were looking for a retest back of the high here, and then we were looking for a rejection of that high back toward 100.5. And price front ran that area just a hair on the top end and dropped it, and then down here in the bottom area was front run again, and now we're already pushing back above the highs. So we have highs here, and now we're pushing through those highs with a very aggressive move higher here. I mentioned before that 102s, the first test at 102 could be a significant defense opportunity for bears, a nice selling opportunity for a rotation here. I still believe that you need to watch 102s here for signs of rejection, but because of the current flow of the market, because we've had highs just shy of it, because we've had higher lows coming into it, this could lead to a break attempt through 102s. So I'd be cautious on first test, and I would watch to see how the market responds to 102s. Rejection can bring you back down to 100.5. Any acceptance beyond 101.75 opens the door to rallying this thing back to 103.02. So that's something to watch out for here. If we look at the intraday time frame and drop this to a 233, you can see how price has been trending higher. We had kind of a modest range that had formed the previous day. We're looking for fade the edges type of movement. And then recently here we saw a break up, we saw a pullback, and we've seen a continuation with a VWAP sloping strongly higher. I would say any pullback into 101.60 could offer a solid buying opportunity for a push into 102s. All right, lastly, let's take a look at ZB. Here's ZB. Looking at the higher time frame ZB, you could see the highs up here are getting lower and lower. The lows are getting higher and higher. So before we were looking at this larger absorption signature, 149.12 to 149.24 was a zone to watch for bounces. Up here we were targeting 153.21 on the returns back up, but we're getting front run on both ends again, and so should this thing drop perhaps into this 25% weekly expansion target, perhaps back into 149s again, should price drop into this zone, it may be time to watch for a rejection signature yet again. That would offer an opportunity to rally this thing back toward 152.20, maybe even as high as 153s in this zone right here. At the moment, this range remains very nice structurally speaking. I mean, you can see the very clear edges. You can see where the outside traders here failed to get paid, and then the squeeze, and now the clear range. So we can continue to honor these edges, but once price gets into the zone here, that's when we'd be looking to fade it back up. On an intraday basis, obviously, we've been trending downward short term over the last several days. So pullbacks are still to be sold at the moment. Here's the previous week's low. So you don't want to see price really establish much above the previous week's low. You want to see bears defend at or just above it. This level right here as well. You got the 151.11. That remains a big time key level. It tried to hold, and then going offered here, that tells you that any retest likely to be defended also for a shot at reaching the lower end of the range on a swing basis. So right now, selling dips or selling pullbacks is a likely course of action until price can reestablish above 150.19. All right, that's it for now. Let's see how this plays out heading into the rest of the session. Good luck and trade well.